All right, welcome to the deep dive, everyone. We love to take these really complicated, really meaty topics and kind of distill them down to the essential elements you really need to know. And today is no exception. We're tackling a big one, how to build companies that are truly new. Not just, kind of iterating, improving on what's already out there, but going from 0 to 1, creating something completely novel. And that's something I think a lot of our listeners are interested in.
Absolutely. And our goal here is to help you really grasp the core principles, have those aha moments where things click into place without getting bogged down, I think, in all the details.
Right. We don't want information overload. We want clarity. And to help us do that, we're diving deep, as we like to do, into 0 to 1, the book by Peter Thiel. And of course, Peter Thiel is not just some academic theorizing about this stuff. He's been there. He co-founded PayPal, Palantir, early investor in Facebook, SpaceX, companies that have reshaped, whole industries. So he's really seen this 0 to 1 process firsthand.
Yeah, I mean that's what makes his perspective so valuable, right? It's not just theoretical. It's grounded in these real world successes and importantly failures, which we learn from as well.
Right, because the path to success is rarely a straight line. So in this deep dive, we're gonna unpack some key ideas from the book. We'll look at why creating something truly new, what Thiel calls technology, and I think he uses that in a broad sense, not just gadgets and software, but any kind of fundamental new, better way of doing things. Why creating something fundamentally new is so critical.
Yeah, we'll explore the kind of thinking you need to adopt to spot those rare opportunities, those 0 to 1 opportunities. And we'll dig into this idea of escaping competition, which might sound a bit counterintuitive, but building monopolies, we're talking about the good kind here,
Okay.
that actually benefit everyone.
Right. Not the evil kind.
Exactly. Yeah, why that's actually vital for long-term success.
Yeah, because you need that space, that breathing room to really innovate, to
Yeah.
really do something new. We'll also get into what Keel calls definite optimism. It's this kind of mindset of having a clear vision for the future. Not just reacting to events as they happen.
Oh, definitely. And then, of course, the power law, this fascinating concept that, a small number of things drive the vast majority of results. And that applies really strongly to business and investing.
Yeah, it's almost everywhere when you start looking for it, this
Mm.
power law. And then we'll talk about secrets, why finding and protecting valuable secrets is so crucial. And then getting into the nitty gritty, like what are the foundational elements that really make or break a startup? So your team, your company culture. And finally, this increasingly important, I think, relationship between humans and computers, especially in the context of creating the future.
Yeah. And I think to really kick things off, to get us all thinking in this 0 to 1 mindset, um, Thiel asks this central question in the book. It's a bit provocative, I think, but it really gets you thinking. He asks, what important truth do very few people agree with you on?
Right. So not just any truth, but something that really challenges the conventional wisdom.
Exactly. And that's where, those world-changing opportunities often lie.
Yeah, because if everyone agrees with you, it's probably already been done, right?
Sure.
Okay, so let's dive into a fundamental distinction that Thiel makes, and that's between technology and globalization. A lot of people, when they think about progress, they immediately think of globalization. You take something that works in one place and you just kind of you scale it up across the globe. So think about China, right? They've rapidly adopted, technologies and business models that were proven in more developed nations. They're building out infrastructure, adopting existing manufacturing techniques, even adapting city designs. Maybe they jump ahead in some areas like mobile payments, but the core idea is taking something from one and making it many, right? It's that one to N process.
Right. It's about horizontal progress, spreading these existing innovations, these existing models. But Thiel, he makes a crucial distinction. He argues that the real game changer, the kind of progress that takes us from 0 to 1, is what he calls technology. And again, not just the latest gadgets. It's any fundamentally new and better way of doing things.
Right. Right. It's really about expanding the pie, not just reslicing it.
Exactly.
And here's where his thinking gets really interesting, I think. He argues that for the future, creating new technology, actual new technology, is more important than just globalizing existing technologies.
Yeah, and it's fascinating. The reasoning behind that. he points to these very real sustainability challenges, right? If we just replicate old technologies on a massive global scale.
Right.
So, imagine a country, dramatically increasing its energy production, but using outdated polluting methods.
Yeah.
The environmental consequences, are pretty clear. Or if vast populations, started consuming resources at the same rate as some developed nations, but using today's tools, today's technologies, the strain on the planet would be immense.
Yeah, it would be unsustainable.
Exactly. So, in a world of finite resources, just spreading old ways of doing things, that's not a recipe for global prosperity in the long term.
Right. We can't just keep doing the same things and expect different results.
Exactly.
And Thiel puts this into a historical perspective, too. He notes that we've seen different periods and how these two forces, technology and globalization, have interacted. So he points to the period between 1815 and 1914. We saw really rapid advancements in both technology and globalization happening simultaneously. And then in the period between the world wars and the opening of relations with China in 1971, technological progress continued, but globalization was kind of more limited, I guess. And then since 71, he argues we've largely seen the reverse, like a surge in globalization, but maybe with more incremental technological breakthroughs, mostly concentrated in information technology.
Yeah, and if we connect that to the bigger picture, right, this emphasis on globalization, it's led some people to believe that the future is primarily about convergence, about less developed parts of the world catching up to the more developed ones. But Thiel, he challenges that pretty directly.
Right.
He suggests that the real leaps forward, the ones that solve these fundamental problems, create new wealth, but without devastating the planet, they're going to come from conceiving and building entirely new technologies.
Right. So not just playing catch up, but actually leaping ahead.
Exactly. Yeah.
And here's a key takeaway for our listeners. Where does this crucial new technology tend to originate? According to Thiel, it overwhelmingly comes from new ventures. It comes from startups.
Yeah, and he looks at history, right? He draws these parallels from the founding of nations to the establishment of these scientific societies to major business breakthroughs. And he observed this pattern. It's often these focused groups of people united by a common mission. They're the ones who are the catalysts for really significant positive change in the world.
Yeah, it's like they have this kind of energy, this drive that maybe larger organizations lose over time.
Right, and he has a very specific explanation for why startups are these hotbeds of innovation. He argues that large organizations, they often become, bogged down by internal bureaucracy, by these vested interests. There's a natural resistance to taking big risks. And risk-taking, that's essential for true innovation.
Yeah, because if you're already successful, why rock the boat? Right.
Exactly.
But that can stifle that breakthrough thinking.
Exactly. Yeah, and then on the other hand, you have these lone geniuses. They might create, a groundbreaking piece of art, but they rarely have the resources or the team to really build, an entire new industry.
Right. They need that support structure.
Exactly. So startups, they're kind of in this sweet spot, right? They're small enough to think outside the box, to adapt quickly, but they're also large enough to take a plan and actually execute it effectively.
Yeah, so it's that balance, that sweet spot between agility and resources.
Exactly.
And Thiel has this great line. He says that a startup is the largest group of people you can convince of a plan to build a different future.
Yeah, I love that. And what's so valuable about startups, it's not just that agility, it's that they have the space to really think from first principles.
Right.
Right. To question these established ways of doing things, to really reimagine, business from the ground up.
Right. So not just tweaking the existing model, but really questioning the underlying assumptions.
Exactly. Yeah.
And that leads us to this whole idea of the mindset of creation. Thiel observes that, the people who build these 0-to-1 companies, the real innovators, they have this knack for finding value in places that other people just completely overlook.
Yeah.
How do they do that?
Yeah, and he suggests, a key part of that is thinking from first principles.
Yeah.
Going back to the fundamentals, rather than just following, existing playbooks or formulas.
Right. So not being afraid to kind of break things down and rebuild them from the ground up.
Exactly. Yeah.
And this raises an important question. How do you actually identify those unexpected places where new value can be created? And Thiel suggests that a crucial skill here is being able to identify, those widely held beliefs that are actually delusional.
Yeah.
So figure out which popular ideas are actually wrong. And that's where you can uncover these contrarian truths that often hold the key to future opportunities.
Yeah, it's almost like you're looking for the blind spots.
Yeah.
Right? In the conventional wisdom.
Right. Exactly.
And then, exploiting those blind spots.
Right. So it's almost like a magician, right? You're distracting people with what they think they know, and then you're doing something completely different.
Yeah, I like that analogy.
So he gives this great example, the new economy of the late 1990s, right?
Mm-hmm.
Where the prevailing wisdom was the more page views you have on your website, the more successful you are. And that was actually seen as more important than, get this, than whether the company was actually making a profit.
Yeah, it was almost like profit was a bad thing.
Right. Like the more money you're losing, the brighter your future must be.
Exactly. The bigger the losses, the bigger the potential.
Right. And of course, this was a major driver behind the dot-com bubble, right? That period of intense and often irrational investment in internet-based companies. And the NASDAQ, if you remember, it peaked in March of 2000. I think it went above 5,000 points. Yeah. And then it had this dramatic crash. By October of 2002, it had plummeted to just over 1,100.
Yeah, I mean, it was a huge correction.
It was a bloodbath.
And a lot of people saw it as a real judgment on the excesses, the unrealistic expectations surrounding internet companies.
Right. And in the aftermath of that bubble bursting, certain lessons learned became, almost gospel in the startup world.
Mm-hmm.
Things like, take small steps, always have a rock solid business plan, vigorous competition is always good, and, build a great product and it will sell itself. But Thiel actually kind of flips these on their head. He argues that the opposite principles are often more accurate when you're aiming for that 0 to 1 breakthrough.
Yeah. So he's almost saying, embrace those bold risks.
Right.
Aim for those transformative changes rather than these timid incremental improvements.
Right. So swing for the fences.
Exactly. And he even says, a flawed plan, one that you can, iterate on, improve, that's still more valuable than having no plan at all.
Right.
Because it gives you direction. It gives you a framework for learning.
So it's about action, right? It's about moving forward, even if you don't have all the answers.
Exactly. And he also argues that, intense competition, it actually destroys profits.
Right.
And that actually effectively selling your product is just as crucial, if not more crucial than the product itself.
Yeah, which is something that a lot of engineers and kind of product people, they don't always want to hear, right?
No, it can be a tough pill to swallow, but he's right.
Yeah, it's like you can have the most amazing invention in the world, but if nobody knows about it, if nobody buys it, then what good is it?
Yeah, exactly.
So it's about having that holistic view. It's not just about the product, it's about the whole ecosystem.
Exactly.
And I think what's interesting too is, the late 90s dot-com era, yes, there were excesses, there was definitely a bubble, but there was also a fundamental insight there. And that was the recognition of the immense potential of the internet and new technologies to really fundamentally change, how we live and how we work.
Yeah, absolutely. And I think the mistake wasn't the ambition, wasn't trying to go from 0 to 1.
Right.
It was that so few of those startups actually achieved that fundamental innovation.
Right. So the vision was there, the execution wasn't always there.
Exactly.
And the market correction, in a way, was kind of a recognition of that.
Yeah, it was almost like people were saying, okay, we see the potential, but now you've got to actually deliver.
Exactly.
And that brings us to this idea of escaping competition and understanding the power of monopoly. Now, it's really important to understand how Thiel defines monopoly.
Right.
He's not talking about, these illegal anti-competitive practices or monopolies granted by, government decree. His definition is very specific.
Right.
A monopoly, in his view, is a company that is so exceptionally good at what it does that no other firm can offer a close substitute.
Right. So think Google and search.
Exactly. Yeah, they haven't really faced, any any significant sustained competition, since the early 2000s.
Right. And he contrasts this with the kind of the economic ideal of perfect competition, where theoretically no company makes any significant profit.
Right.
Because there are so many similar alternatives.
And becomes this race to the bottom.
Exactly. And he argues that, while competition is often presented as this, universally beneficial force that drives innovation, drives efficiency, it can actually be quite destructive.
Yeah.
It leads to this relentless struggle for survival where focusing on long-term innovation takes a back seat to these kind of short-term competitive battles.
Yeah, you're so focused on just surviving, you can't really think about the big picture.
Right, exactly.
And what's interesting here is his concept of competitive lies.
Right.
He points out that entrepreneurs are often tempted to kind of deliberately understate the true scale of their competition.
Right.
They define their target market incredibly narrowly, so it looks like they're dominating.
Right. So the classic example, the British restaurant in Palo Alto.
Yeah.
That claims to have a monopoly on British food within a 5-block radius.
Exactly. Yeah, and they completely ignore the much larger restaurant scene.
Right, or the movie pitch, the Jay-Z starring at a cross between Hackers and Jaws.
Exactly. I
Yeah.
mean, it's definitely unique, but maybe for a reason.
Right. There's a reason nobody's made that movie.
Exactly.
And then Thiel introduces this powerful concept of creative monopoly. And this is not about stifling innovation. It's not about exploiting consumers. It's about creating entirely new products or services that benefit everyone. And as a result, generate sustainable profits for the innovator.
Right. So these creative monopolies, they're actually engines of progress. Right.
Exactly.
Because they add these entirely new categories of abundance to the world.
Right. So think Apple's iPhone, right? It wasn't just a slightly better mobile phone. It created a whole new platform for computing, for communication, for everything.
Exactly. It changed how we interact with technology, period.
And it created a huge amount of value in the process.
Absolutely.
And this raises a really interesting question. If creative monopolies are so beneficial, why are economists so fixated on competition as the ideal? And Thiel suggests it's partly historical. It's this kind of hangover from 19th century physics, where individuals and businesses were seen as these interchangeable atoms in a system striving for equilibrium. And, those models of perfect competition, they're easy to analyze mathematically, but Thiel argues in the real world of business, that kind of equilibrium actually signifies stasis and ultimately decline.
Yeah, it's like a steady state, right? There's no real dynamism.
Right. So a creative monopoly, in contrast, becomes this engine for future progress. Because if you have the prospect of enjoying years, even decades of monopoly-level profits, that gives you a really strong incentive to invest heavily in long-term R&D, the kind of, fundamental innovation that companies trapped in the daily grind of competition they just can't afford to do.
Yeah, and Thiel, he outlines, these 4 key attributes that these kinds of companies tend to have. The first is proprietary technology.
Right.
So some kind of unique innovation that makes your product or service significantly better. He says at least 10 times better than any existing substitute.
Right.
So think, Google search algorithms.
Right.
PayPal's seamless integration with eBay in the early days. Amazon's vast selection of books. Apple's integrated hardware and software design in the iPad.
Right. So it's that unique edge that nobody else can easily replicate.
Exactly. Yeah, and the second characteristic is network effects.
Right.
Where the value of your product increases as more people use it.
Right. So the classic example is Facebook, right? The more people are on Facebook, the more valuable it becomes to each individual user.
Exactly. But what's interesting is that these network effects, they often start in very small, very niche markets.
Right.
So like Facebook starting with, just Harvard students.
Right. So it's about finding that initial core group, that beachhead.
Exactly. And then the third key attribute is economies of scale. So a truly monopolistic business, it often becomes stronger as it grows larger, right? Because the initial fixed costs, things like R&D, engineering, management overhead, those can be spread across a much larger volume of sales.
Right. So your marginal cost of producing each additional unit goes down as you scale up.
Exactly. And software companies, they have a really big advantage here.
Right, because the marginal cost of producing another copy of software is essentially zero.
Exactly.
So once you've built it, you can just keep selling it without incurring a lot of additional costs.
Exactly.
And then the fourth characteristic is strong branding. But Thiel has a really important caveat here.
Mm-hmm.
He cautions against prioritizing branding over having a truly superior product or service in the first place. So he uses the example of Yahoo, trying to regain its former relevance under Marissa Mayer.
Mm-hmm.
Redesigning logos, acquiring trendy startups. That might generate some buzz, but it doesn't guarantee that you're actually creating something truly valuable.
Exactly. The real lasting brand.
Yeah.
It has to stem from offering something that's actually better.
Right, so substance over style.
Exactly.
Yeah, and then building on these characteristics, Thiel emphasizes the importance of scaling up strategically. Not just growing for the sake of growth, but doing it in a way that reinforces your monopoly position.
Yeah.
So he uses the example of Amazon, right? They started by just completely dominating online book sales, a relatively niche market, and then they very deliberately expanded into these adjacent categories, CDs, videos, and eventually becoming the everything store.
Yeah, it's a great example of kind of methodical expansion.
Right.
Starting with that strong beachhead.
Right. And he contrasts that with eBay, which struggled a bit more when they tried to move into more commoditized markets where their auction model wasn't as well suited.
Yeah, because in those commoditized markets, it's really all about price.
Right. And that leads to a really important point, which is that Thiel argues that this Silicon Valley obsession with disruption often leads to companies, just attacking established players head on in existing markets.
Right.
Which leads to this really intense competition.
Mm-hmm.
Instead, he advocates for a different approach, which is aim to be the last mover in your chosen market. So the initial burst of being the very first, that's just one tactic. What matters in the long run is becoming the dominant player in your specific niche and then expanding from that position of strength.
Yeah, it's almost like, in chess, you study the end game before you even think about the opening moves.
Right.
Yeah.
So it's about having that long-term vision.
Exactly.
And that brings us to a question that I think is always debated, and that's the relative roles of luck versus skill.
Yeah.
In achieving business success, we often hear successful people, Malcolm Gladwell, Warren Buffett, Jeff Bezos, they often attribute a lot of their achievements to just good luck, being in the right place at the right time.
Yeah, right place, right time.
And as Thiel points out, there's often this cynicism, people who say, oh, yeah, you just got lucky. And he even quotes a commentator who sarcastically remarked that success is never accidental, said all multimillionaire white men.
Right.
But Thiel argues that, if you fundamentally believe that life and business outcomes are just purely a matter of random chance, then the whole exercise of trying to learn about building successful companies, it becomes kind of pointless.
Yeah, it's almost nihilistic.
Right. It's like, what's the point?
Like, why bother?
Yeah, why even try? So he makes a distinction between what he calls definite and indefinite attitudes towards the future.
Mm-hmm.
So a definite attitude involves seeing the future as something that you can actively understand, influence, and shape through careful planning and deliberate work.
Right.
An indefinite attitude, on the other hand, treats the future as largely hazy, unpredictable, random. And that leads to a more passive, reactive approach to life and business.
Yeah, it's like you're just kind of drifting along.
Exactly.
Rather than actively shaping your destiny.
And Thiel sees a lot of what he calls indefinite thinking in the world today, where the process of doing things often seems to take precedence over actually achieving meaningful results. So people focus on, accumulating options, a diverse resume, lots of extracurricular activities, but without necessarily having a clear goal in mind.
Yeah, it's like they're preparing for everything, which means they're not really prepared for anything specific.
Exactly. And he contrasts what he calls definite pessimism, where you have a clear vision of the future, but you think it's going to be negative.
Mm-hmm.
He uses modern China as an example here, surprisingly, driven by this underlying fear that they won't be able to sustain their economic growth.
Right.
Versus definite optimism, where you
Yeah.
hold a clear vision of a better future and believe you can actively work to bring it about. And he argues that the Western world from the 17th century up through the mid-20th century was largely characterized by this sense of definite optimism,
Yeah.
fueled by ambitious projects like the Weber Plan to, really reshape the San Francisco Bay Area. And then he talks about how the baby boomer generation, having experienced, this era of seemingly effortless progress and prosperity, maybe inadvertently fostered a generation of indefinite optimists, people who grew up expecting that things would just generally continue to improve without requiring a lot of effort.
Yeah, it's like they inherited this optimism,
Yeah.
but without the definite plan or the hard work that went into achieving it.
Right, right. And he argues that shift has influenced how we think about success today. So people often overrate the role of chance and underrate the importance of having a concrete long-term plan.
Right.
And we see this indefiniteness reflected in modern finance,
Yeah.
where the accumulation of financial assets sometimes becomes an end in itself. Increasingly complex financial instruments that often obscure the underlying purpose of capital allocation in the real economy. He points to indefinite politics, where the focus is on short-term polls rather than, articulating a clear long-term vision. And even indefinite life, where death is often accepted as this inevitable and largely random event, maybe hindering more ambitious approaches to extending lifespan.
Yeah, it's like we've lost that sense of agency, that we can actually shape the future,
Right.
both individually and collectively.
Right. And Thiel really emphasizes the power of having a clear long-term plan. He uses Apple's development of the iPod as an example,
Right.
which was, this multi-year vision that was largely underestimated by most analysts at the time.
Right.
And he concludes that section with a really powerful statement. He says, "A startup is the largest endeavor over which you can have definite mastery."
Yeah, I love that quote.
Yeah, it's very empowering.
It is.
And that leads us to this concept of following the money and understanding the power law.
Mhm.
And he starts this off with this well-known, although maybe apocryphal, quote attributed to Einstein
Right.
about compound interest being the eighth wonder of the world, highlighting the incredible power of exponential growth over time.
Yeah, the idea that gains build upon gains.
Right. And this power law, Thiel argues, is particularly evident and important to understand in the world of venture capital.
Yeah.
What it essentially says is that within a typical venture capital fund's portfolio, a very small number of companies will generate exponentially greater returns than all the other investments combined.
Right. So it's not a linear distribution.
Yeah.
It's very much skewed.
Right.
Yeah. In fact, the vast majority of venture-backed startups, they